What does GRIP do, right? Let's start with that question. Um, we believe that Indian investors are looking for alternative fixed income investment options. And through GRIP, our aim is to provide an answer to that solution with a product that has an attractive risk reward ratio. We're not a platform where you will find multiple investment options. You'll not find mutual funds and bonds and invoice discounting and lease income. For very specific reasons that we'll outline later in the presentation, we work to identify a particular asset class that we believe would be attractive to investors, both from a risk and reward perspective. And we build GRIP as an online platform to enable ease of transaction in making that investment. The typical investment period of deals on our platform are 24 to 36 months. And during that period of time, investors can co-invest or invest in small portions along with other investors to purchase and lease physical assets like vehicles, electronics, and furniture. All of these assets are leased to companies. They're not leased to individuals. And I think that's an important distinction, especially as you think of the comparison between P2P platforms and something like GRIP. The deals on our platform till now have offered a 20% plus return on an IRR basis, on a pre-tax IRR basis. And the way we structure our returns is to have pre-agreed rentals with the corporate company or the corporate leasee to receive over the 24 to 36 months. We further enhance the security of the transaction through a security deposit or by setting up an escrow account. And to give you the option to invest in very small sizes, the minimum transaction size is kept as 20,000 rupees. Now, every investor has a choice of multiple investment options. And we had the choice as a platform to choose one of those options to start our business with. But there's a very specific reason why we picked leasing, or what is in the traditional language called lease finance. If you look at this slide, the top criteria, the top 5 points: low minimum investment, medium risk profile, physical security, return, and ease of exit, were the 5 most important criteria that investors told us that they're looking from an alternative asset. When we benchmarked the existing assets that are available, we found there were many missing gaps, right? But when we compared it to leasing, we realized that leasing touches all the boxes. On our platform, you can invest at as low as 20,000 rupees. Because you're leasing to a corporate whose diligence can be done, and because you're receiving income on a monthly basis, and hence your risk is reducing, the risk profile is medium. You also have a physical security because the lease is about the asset that you have purchased. And hence, there is always something to fall back on in the case of a default. The return profile is attractive. At a 20% plus IRR, you're looking at 3 to 4 times the return of a fixed deposit on an IRR basis, and more than 2 times the return on a yield basis, assuming no reinvestment. And finally, unlike an angel investment where you're dependent on a secondary transaction, an IPO to happen for exit, or in the case of real estate, you're dependent on the market cycles. In the case of a lease transaction, you are getting an exit every month or a partial exit every month because you're getting a monthly return from the transaction. And hence we believe that as an alternative asset class, this made a lot of sense for investors. We do not mean to say that there is no risk in this investment. There is a risk in this investment. Otherwise, the returns would not be what they are. But given a combination of risk and return, we believe that this is something that is potentially attractive to a large number of investors. More importantly, we believe that there is a huge arbitrage that is today happening when customers put their money in a fixed deposit, in a CASA deposit with a bank. That same money is ultimately going to companies at 14 to 18%, right? So what you're putting in the bank at 4 to 6% is getting cycled through the banking process to 14 to 18% to companies. We believe there is an opportunity to disintermediate this and have investors directly access companies and get this additional 1,000 basis points, right? The difference between 4% and 14% is 1,000 basis points. Have this additional 1,000 basis points as an earning for them. This can be true for many assets, right? You can say the same is true for bill discounting. But can you do it in an asset class where the risk is managed? And we believe that lease offer that opportunity because they're asset backed. They're not dependent on stock markets or money markets moving based on volatility. You can identify high quality leases in growing industries to bank with. or to invest with. You can take security deposits and escrow agreements to further secure yourself, and you get monthly returns. We believed that creating lease finance with this 1,000 basis arbitrage in a risk adjusted manner became attractive for investors.